Welcome back. You're watching Business Morning on Channels Television. We'll start our focus now on commodities. And, of course, we're looking at where the market is today. Financial Derivatives Company always, of course, gives us an update every Tuesdays and Thursdays. And today, Okoyemi Oguntade, who's representing Financial Derivatives Companies, is here with me in the studios. Thank you so much for joining me on the program, Okoyemi. Good morning.
Good morning, Harriet.
So your latest report says there's no change in domestic commodity prices. I remember the last time we had conversations, it seemed as if the market was actually, beginning to price in this new forex that we had, the introduction of the interbank foreign exchange market, and things were looking up a little bit. So why are we where we are right now?
Well, right now in the commodities market, prices are stable because during this period, we usually have kind of like a flatlining of commodity prices because of the harvest season that is at hand, it's approaching, or it's even here right now, because what we have is between the month of April and June, we have the rainy season, and during that period, we usually see a spike in commodity prices, but towards the end of the harvest season, or towards the end of the rainy season, we see prices coming down, and like you rightly mentioned, the flexible exchange rate definitely has had an impact on commodity prices. We've seen a marginal decline in prices, but what we're seeing right now in the market is that traders are still trying to sell off the old stock or the old inventory that they purchased at the high parallel market rate, and they're still trying to make sure that they cut their losses on those high costs that they had to incur before they officially infuse the new exchange rate with their new inventories.
So we're still seeing prices of inelastic products, kind of tepid, unchanged. For instance, the price of rice, 50 kilogram of rice is still at 13,000 naira, at least here in Lagos.
Yes.
In Kano, it's 12,500, and Onisha, 12,800. I was actually looking at the price of beans.
Okay.
But also, your report shows that, we've seen a recent spike in the price of diesel, and kerosene is also at an all-time high. This all definitely is affecting consumers' output. And just at about the time when we seem to have gotten past the fuel issue, then we have to deal with diesel and we have to deal with kerosene.
Yeah, this is actually quite surprising, because you would expect that the kerosene and the diesel market, they're deregulated. We shouldn't be experiencing scarcity, because it's already a deregulated market. We know the reason why we were experiencing fuel scarcity was because the market wasn't deregulated. We still had to be in the marketers still had to sell petrol at about 86 naira 50. But as soon as they adjusted it towards 135 naira to 145 naira, we saw that fuel scarcity came down. But then here in a deregulated market, we're seeing that prices, as at the beginning of this month, I think kerosene was going for about around 150 naira, and diesel as well was going for about 170 naira for a litre. But now you have kerosene going all the way up to 240 naira for a litre, and diesel at 200 naira. And most marketers are complaining, one, they do not have access to the forex to import, and it's making you think, okay, now we have a flexible exchange rate, and we have a market where you can source for this forex. But then when you look at the market, you notice that there are more bids than offers. So we're wondering, okay, maybe the liquidity in this market isn't enough to meet our domestic demand, and we're still anticipating that foreign investors would come in with the forex we need to carry on with our activities. But then foreign investors are going, no, they don't think 280 naira or 282 naira for a dollar is the fair value.
Yeah, 281,
it's the fair value for the naira. They believe it should go towards 300, where we'd see a huge more convergence between the parallel market and the interbank foreign exchange market. But the thing is, this market is now a flexible market, and if it's supposed to go all the way to 300, it would eventually. So what we have right now in the market is we're waiting for the forex to come in, and diesel and kerosene, I'm not sure how long it's going to take before we see diesel and kerosene back in the market. But for now, we should be worried, because, it's probably going to affect inflation figures in June. Even though we're seeing a decline in commodity prices here, then we have diesel and kerosene going up, and we know inflation is already at 15.6%.
But we also see, like yesterday, it was very exciting news. The Central Bank and the City Bank of Nigeria actually held the first trade for $20 billion, as in for the Naira settled OTC futures market. And so it looks like, yes, and most of the, that came from foreign investors. So it seems as if foreign investors are beginning to have more interest in that particular segment of the market. And you would also expect that this should kind of rub off on other segments, particularly for those who import diesel and cooking gas, for instance, because from your analysis, cooking gas prices are up. We have it at 4,500 naira for a 12.5 kilogram gas cylinder.
Well, what we've been told by the authorities, the reason why we're having cooking gas prices increasing is because of the infrastructure. So they said the pipelines that are supposed to transport cooking gas and other fuels like diesel, petrol, as well as kerosene. What they said is they give an advantage more towards diesel and petrol. So they are called white products. So they transport these products first before cooking the gas. So they've complained that yes, they have the storage, they have cooking gas, but they are unable to transport it to the place where it will be distributed. And that's why we're saying, so they're saying there's no scarcity, it's just that they've not been able to transport it to where it needs to be distributed. So it's more like an infrastructural deficiency there. Not necessarily, it's not necessarily affected by the foreign exchange or anything like that. Okay. It's more of an infrastructural deficiency.
So any idea of how long this is going to last?
I have no idea. We would have to speak to the government more and find out what they're going to do. Because whenever it comes to an infrastructural deficiency, it always has to do with you have to create the infrastructure, and we know that putting infrastructure in place, it's more of a long-term project. It's not something that happens between the blink of an eye and a yawn. It's something that takes a couple of years.
So back to these agri-commodities, at least for those that you're tracking, about 7 of them. We have Nestle, Guinness, Honeywell, Flour Mills Nigeria, Cadbury Nigeria, Nigerian Breweries, and Dangote Sugar. And you say that investors are facing pressure to sell off stocks. When it looks like it's actually been a bumpy ride for most of this, these stocks. But then things seem to be looking up. But then investors are under pressure to sell. Yes,
the reason why is because if you look at what happened last week with Fitch downgrading Nigerian credit ratings from a BB minus to a B plus, that in itself is already like a negative. Is a negative flag, or it leads to negative sentiments in the stock market for one. So that's why you would see that in the stock market we're having investors selling off their stocks in order to cut their losses in that market.
Okay, so but in the short term now, because we're already approaching the weekend, this is Thursday, and people will be wanting to go to the market. Did you expect to see prices continue to hover within this range, or we expect to see something better?
For now, I expect prices to hover around this range, but we would probably see prices tapering downwards, maybe towards mid-July or towards the end of July. But I don't expect prices to, come down significantly. It will probably be like a downward trend. It would come down to it would be like a crawling downward trend, as opposed to, a significant drop in prices in the market. But for now, I expect them to hover around this range.
Okay. Well, thank you so much for coming on the program this morning.
Thank you for having me.
Shedding more light on those numbers. So, yes, it seems like it's going to be a topsy-turvy ride, but then things might improve in a very, not short, in the medium to long term. Thank you so much.
Thank you for having me.
So let's talk about some other commodities that we're tracking on the show. Talking about the energy markets now. Some of the stocks that we track here from the Nigerian Stock Exchange, about 7 of them, 7 energy stocks. Yesterday, we saw Forte Oil being the only gainer among the 7 stocks we track. It appreciated 1.59% to finish at 194 naira 3 kobo. Also, investors trading 33,651 units of this particular equity. Today, of course, is the last trading day in the month of June. Investors and dealers waiting for Owando to release its result for 2015. Of course, the company actually said that by the end of June, it will turn in that result in the Nigerian Stock Exchange. But yesterday, we saw it dropping about 1.12% to finish at 6 naira 20 kobo. Investors trading quite heavily in this particular equity. We saw a volume of 5,194,960 units exchanged by investors. The others, grey shoot for Mobil, MRS, Total, Seplat, and Con Oil. No change in terms of percentage was recorded, and even price change was not recorded for this particular equities. But Mobil had about 5,265 units exchanged by investors. MRS, 9,873 units traded by investors. Total had 786,280 units exchanged by investors. Seplat, 5,115, and Conoil had 7,840 units exchanged by investors. So of the two stocks that witnessed any change on that list, Owando and Forte Oil, we have daily index return coming in at plus 0.40%. Year to date is also positive, 6.1%. Price to earnings, 26.27%, and dividend yield at 1.9%. Well, some other news that we're tracking for you in the energy space. The Ministry of Petroleum Resources has signed memorandums of understanding with several Chinese firms for over $80 billion new investments spanning 5 years in the oil and gas industry, covering pipelines, building of refineries, gas and power, facility refurbishments, and, of course, upstream financing. According to the Minister of State for Petroleum Resources, Dr. Ibe Kachuku, out of the $80 billion investment, $10 billion was raised for two Nigerian companies, Delta Tech and Salvic Petroleum. Well, Nigeria also got commitments from Sinopec and China National Offshore Oil Corporation to commit further to investments in Nigeria's oil subsector to the tune of $20 billion, which would be concluded in the next few months. So this would effectively bring the total amount of prospective investments by Chinese firms over a 5-year period to over $100 billion. Now, Dr. Kachuku says, unlike the oil for infrastructure deals with Chinese, Korean, and Indian firms entered into by previous administrations, these projects would not be paid for with oil, adding that the returns on investments made by the Chinese would come from the projects. Well, the recent militant attacks on oil and gas facilities has prompted the federal government to look towards developing alternative sources of gas supply, particularly gas reserves in the inland basins for power generation. This was talked about at the Nigeria Gas Association's Business Forum in Lagos, and a number of options being considered to diversify the nation's sources of gas supply was focused on, including gas terms, which are currently being worked on for production sharing contracts, concessions to explore the huge offshore reserves. Others include the regasification of liquefied natural gas as a strategic intervention for alternative gas supply. Well, Business Morning continues in just a moment. We're talking about how the first half of the year looked like for the Nigerian economy. We'll be right back.